Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to do an update on Apple stock, ticker symbol AAPL, which is obviously a stock that I have been following over the months, and I also own the stock as well, as you probably know from my previous videos that I did on the stock. And the last video I did was early in September, and I was saying that I'm not buying more, I'm gonna just hold my shares because Apple seemed to me overvalued, okay, at the time. So what has changed today? Because I have received many comments, please do an update on this big tech. So okay, I'm gonna do it, as since then we have had the new processor, which is amazing. And now yesterday actually they came out new data on very great sales of iPhones. So we're gonna see all of that, and I'm gonna tell you my new price target. The only thing I ask you guys is please leave me an early like. It's very important. You help me a lot to reach more people and grow the channel, and subscribe to the channel so you don't miss any new updates. Let's begin. So just quickly, the graph. We have had since the pandemic this huge run up from Apple. The last video I did, we were around here, early September, around $120 if you go to see it. And I told you that I'm not gonna buy that anymore. And since then, basically the stock has not done much. Sideways movement. And that's normal because when a stock reaches his fair price, it's gonna go between that fair price. Okay, now for stocks like Apple, usually they always trade at a premium, but if the fair price is around, let's say 100, the stock cannot go to 300. Okay, it doesn't make any sense. So that's why I said that I was just gonna hold my shares. But let's see what has happened. Now, first of all, Apple came out with a new processor, actually the M1, which is amazing. Now, I am a big fan of Apple products, so probably I can be a little bit biased, simply because I am not let's say a computer genius, and I find these things very powerful and easy to use, while for other devices probably you should be a little bit more experienced. So that's why I buy Apple stuff, because you just turn it on and it works perfectly. The new processor, we have the M1, which if you just read the reviews at the moment, they say that it is probably the most powerful thing that they have done. That's obviously a game changer in terms of their devices, especially when it comes to MacBooks. But that's not the end, because yesterday, that's just from yesterday, from the CNBC, the iPhone production is gonna boost 30% next year, which obviously Apple share went up, and this is because a Japanese news outlet, Nikkei, I don't know how to pronounce it, reported that iPhone production is set to rise by 30% in the first half of 2021. The Cupertino firm is planning to build up to 96 million iPhones between January and June next year. That includes the new 5G compatible iPhone 12 models, as well as the iPhone 11 and the iPhone SE. So basically shifting through this new technology, 5G, and that means a boost for them, because if people want to use that technology, they need something that allows them to use that technology, and then more and more people are gonna actually upgrade their devices to being able to use that 5G stuff. So a boost in sales. And now the main question is, will it last? Because the main problem, if you remember from my previous analysis about Apple, is that it is a wonderful firm which has become very mature. Okay, so when you do these kind of devices, people probably in 1 year the sales are gonna explode because of a new technology, as we have seen just now in the article. However, in the long term, that explosion of 1 year, like for example we have seen here in 2015, went from 182 to 233 billion dollars in revenue. You see the years later, actually it's not gonna continue. Okay, it's not a huge compound growth stocks like can be, for example, Amazon. You have one exceptional year, which it's very correlated to actually the success of a new product which has been launched. And then obviously people upgrade their mobile, their computer, and then they are gonna keep it for at least a couple of years. So you have this kind of boost 1 year and then come back down and calm a little bit. Now, as we have seen, this is from the old analysis, the growth rate, look at the slope of this line, was actually incredible from 2005 to around 2014-15. And then, as we can see, this line has flattened a little bit. Obviously, it is a $2 trillion company and it has become mature. Okay, so it is continuing to grow a little bit, but not at that incredible rate. So that's why I also told that. My opinion, it was overvalued back in September when the stock was trading near 140. Now, what has changed with these kind of things? The new processor, the boost in sales of iPhones. Now, this is from just 2015, okay, and we can see up until 2020, we have had a very kind of flat growth lane. Now, this boost, we have another boost, like the one that we have seen in 2015. Analysts are basically predicting 2021, $315.27 billion for Apple, and then 332 for 2022 expectations. Now, obviously, this is a jump of more than 20%, and it is not something common for Apple, especially in the last 5 years. They have been doing sometimes even losing, as we can see from here, and then a little bit higher and then a little bit lower even before the pandemic. So overall, it was like around a 10% an average, okay, growth rate. Now 20, obviously, it is an incredible boost, so you do a step up for at least a couple of coming years. So that obviously has changed the fair price. And now, however, what we have to keep in mind is that what is going to happen after that is going to continue to grow at a 20% rate, or is going to do something similar to that one. And analysts are predicting that is going to happen, okay? It's going to flatten once again, and that's pretty normal. If you are expecting an incredible growth rate like 30% per year, it is not a situation like that. Now, in my previous video, I also showed the business division. We have a 55% in iPhones, and then we have wearables, which was doing very great. We have the Mac division, and then we have the iPad division, which it wasn't doing that great, and then obviously the services division, which I think is that one. Yes, 17.79. So we have Apple TV, all that kind of stuff, which is a significant portion of the business, and it was doing very great. Now let's take a look before the valuation to the new situation in the fundamentals. So from September 20, we have, this is basically the last quarter that they have released. So we had a revenue of $64.7 billion, and then what we care about is the net margins. Net margins, which overall during the last 5 years, they have been above 21%. Now, obviously, this is the year of the pandemic, so they came down below 20%, but I think that is gonna come back to where it was, okay? So at least near 21. So it is a very mature business, but very consistent and constant business. So you don't have crazy numbers, 1 year 35, the year later 8. You have very constant number. When we take a look at the financial, we have a current ratio of 1.36, which is great for a huge company like that. And then the total ratio, 1.25, with total assets 323.8, liabilities 258.5. Obviously, they have a little bit of debt, okay? We cannot deny it. It's not that they are gonna go bankrupt, but their debt situation, let's say, it is different from Google and Facebook, okay? Because if we consider the total debt, they have $107.4 billion in debt. That's 164% in terms of debt to equity ratio. Now, when we we deduct the 30 plus billion dollars that they have in cash and cash equivalents, we have a net debt above 100%. So now the market cap above $2 trillion, 2.15 trillion, and the book to value is quite high at a 33. Now, how do we value Apple? Obviously, discounted free cash flows. I took the revenues and then obviously the ratios. So here we have the cash flows. Now, here we have a longer time frame. I did until 2028 and then a terminal value because it is a constant business, very mature, so I can try to estimate even longer than 5 years. Okay, usually you don't do that with very new businesses because it is kind of impossible to understand that. Let's take a look at the requirements. 8.5 as a discount rate, it is a perfect rate in my opinion for a huge company like Apple, very mature, not much of a risk. Okay, so 8.5, it is definitely okay. This is the magic basically. Now 2021, 2022, I have used the analysts' expectations in terms of revenue. Then 12%, which is, let's call it the normal case scenario, from 2023 to 2025 in terms of growth rate of revenues. And then from 25 to 28, a 10%, I've said, okay? And then after that, perpetual growth, 2.5%. That's the scenario that analysts are expecting, okay? So I've called it the normal case scenario. And once we discount all that back, we have that basically divided by the total amount of shares outstanding. The fair price is the price of today. Okay, so the stock at the moment, it looks fairly priced for this scenario. Market cap 2.1 trillion, very similar to the one today. So that's, let's say, the normal case. Now let's take a look at the best case scenario. So the bullish one. What changes is that from 23 to 25, instead of 12, I said 14% growth rate. 2025, 28, 12% growth rate. Okay, so scaled up by 2%, and then rate of return and those things remains the same. We have fair price today with this valuation of $138.29 per share. So in terms of best case scenario, the stock can have a little bit of space to continue to grow. Anyway, this is not the most likely scenario, even though Apple all the times comes out with new projects, new stuff, new businesses. So, okay, it is a mature business, but they are also able to find all the times new stuff to make money. So we don't know. It can happen, okay? It can happen that they will grow higher than 12%. Now we have the worst case scenario. So let's take a look at how it is. And the worst case scenario tells that the growth is gonna flatten even more. 2023, 25, 9%, 25, 28, 7%. And same requirements over there. And that will give us a fair price today of $109.5 per share. We take an average of these three scenarios. The biggest likelihood, in my opinion, is the normal case scenario at 124.6, 125 basically. Very, very near to the price that we have today in the stock market. Because the stock is now trading very near 127, so it is at the fair price. After that price upgrade, because of fundamentals, okay, so new processor, new stuff, and some said in the comment, what is the effect of the new processor? Where is that one? Previous fair price was near $90 per share, and now it's 126, 125. So that's the effect. And what happened, as I showed you before, is that instead of continue with this flat line, we have had boom. It's like when you go upstairs, okay, and you take another step. So a step up, and then probably is gonna continue to go a little bit more flat over the next few years, like we have seen here. Now, I'm gonna continue to hold my shares. I think that Apple, it's a wonderful business in terms of if you want to have a big stock in your portfolio, just to not worry too much that it's gonna go bankrupt the day later. However, guys, if you're looking for a really extreme growth, this is not the stock for you. Okay, this is gonna probably become, in my opinion, even more of a dividend stock. It already is actually, but I think that in the long term, they are gonna try to benefit shareholders even more with dividends. Okay, so obviously, if you want a 35% revenue growth rate year over year, Apple is not for you. But now you have the fair price, so it is your call. Just take your decisions, guys. So this is the end of the video. I hope you find it interesting, and leave me a like if you like the video. Leave me a comment below. Tell me, do you own Apple? Are you planning to sell or buy more? What are you gonna do with that? And subscribe to the channel. And as always, guys, have a wonderful day.